Banking. What is banking? Why is banking and banks significant in today's life? So, what is banking? Banking is directly or indirectly connected with the trade of a country and the life of each individual. It is an industry that manages credit, cash, and other financial transactions. In banking, the commercial bank is the most influential institution for any country's economy or for providing any credit to its customers. In India, a banking company is responsible for transacting all the business transactions, including withdrawal of checks, payments, investments, etc. In other words, the bank is involved in the deposit and the withdrawal of money repayable on demand, savings, and earning a decent amount of profits by lending money. Banks also help to mobilize the savings of an individual, making funds accessible to businesses and help them to start a new venture. However, unlike commercial banks, the private sector banks are owned, operated, and regulated by private investors and have the right to operate according to the market forces. Kinds of banking. Banks are additionally classified into four kinds: business or commercial banks. These banks are managed by Banking Guideline Act 1949. They acknowledge the public store from the general population for loaning or a venture. Cooperative banks. Agreeable banks are attempted by the state, helpful social orders act and give modest credit to their individuals. The rustic populace is a subject to the helpful banks for its monetary reinforcement. Specific or specialized banks. These banks give monetary assistance to unique ventures, unfamiliar exchange, and so forth. Barely any instances of specific banks are unfamiliar trade. Fair and import banks, improvement banks, and so forth. Central bank. These banks oversee, check, and screen every one of the exercises of the business banks of a country. Responsibility and functions of commercial banks. Invitation of deposits. Banks give the advances or loans just situated on the sum saved by general society. They loan money. They get funds for lending through deposits in current and savings account. They pay interest on deposits as per the rates determined by the Reserve Bank of India. Loaning of funds. Giving advances to the general public is a significant characteristic of banks. Loans or advances can be made as overdrafts, cash credits, term advances, and so forth. Cheques. Banks offer cheque facilities to the owners of savings and current accounts in order to withdraw their money. It is the most popular form of credit instrument. Bank also encashes the checks drawn on another bank. There are two kinds of checks. First, bearer checks that are cashable immediately. Second, cross checks that are to be credited to the pay's account. Funds. Banks also transfer. It renders money transfer facilities through drafts, pay orders, net banking, NEFT and RTGS, etc. on to collect the funds. Kinds of commercial banks. First, public sector banks. Public sector banks are those banks having the major holding of the government. Examples: State Bank of India and Punjab National Bank. Second, private sector banks. Private sector banks are those banks that are owned, controlled by private promoters. They operate according to the market trends. Examples: HDFC and ICICI. Now let us see what is e-banking and what are its advantages. E-banking is the strategy by which client goes through with exchanges electronically by means of the web. A portion of the instances of e-banking are overseeing Store Connect or store account, online asset move, ATM, electronic information trade, and so on. The benefits of e-banking is that it gives 24 hours and 365 days of banking administrations. The heap on branches can be diminished by having a concentrated information base for quicker preparing. Clients can make an exchange from any place like the workspace market and so forth. It incorporates recording of each exchange. It gives more prominent customer loyalty, higher security as far as cash is concerned. In the United States of America, banks are directed by the US Central Bank, which is one of the world's significant national banks. Most importantly, national banks are liable for money steadiness. They control expansion, direct financial strategies, and administer cash interest and supply on the lookout. In basic words, we can say that bank is a monetary establishment that attempts the financial action. That is, it acknowledges, stores, and afterward loans, something similar to procure certain benefits. In 1865, the Allahabad Bank was established as a joint stock bank. This bank has survived till date in India and is now considered as the oldest surviving bank in India. And yes, don't forget to subscribe to the channel for future learnings. Thank you.